Hey everyone, and welcome. Are you curious about the stock market but feel overwhelmed about where to start? You're not alone. Investing in stocks can seem complicated, but it doesn't have to be. In this video, we'll break down the process into simple, step-by-step instructions so you can confidently begin your investment journey. What is the stock market? Before we dive in, let's understand the basics. The stock market is essentially a marketplace where buyers and sellers trade ownership shares of publicly listed companies. Think of it as buying a small piece of a big company. When the company does well and its value increases, the value of your shares can also go up. Conversely, if the company struggles, the value of your shares might decrease. Step 1. Educate yourself. Step number 1 is crucial. Educate yourself. Understand the basics of investing, different types of stocks, like common and preferred, and important terms like shares, dividends, and market capitalization. There are tons of free resources available online, websites, articles, and educational videos. Take your time to learn the fundamentals. Don't feel pressured to rush into investing before you have a basic understanding. Step 2. Define your financial goals and risk tolerance. Next, think about your financial goals. What are you investing for? Retirement? A down payment on a house? A child's education? Your goals will influence your investment timeline and how much risk you're willing to take. Risk tolerance refers to your comfort level with potential investment losses. Younger investors with a longer time horizon might be comfortable taking on more risk, while those closer to retirement might prefer lower risk options. Be honest with yourself about your risk appetite. Step 3. Open a brokerage account. Now, it's time to open a brokerage account. A brokerage acts as an intermediary between you and the stock market, allowing you to buy and sell stocks. There are many online brokers to choose from, so do your research. Consider factors like fees, the investment options available, the platform's user-friendliness, and the research tools they offer. You'll typically need to provide personal information and funding details to open an account. Step 4. Determine your investment amount and strategy. Decide how much money you're comfortable investing. It's generally recommended to only invest money you won't need for immediate expenses. As for strategy, you might consider starting with index funds or exchange-traded funds, ETFs. These are baskets of stocks that track a specific market index, offering diversification with a single investment. This can be a less risky way for beginners to get started compared to investing in individual stocks. You could also consider dollar-cost averaging, which involves investing a fixed amount of money at regular intervals, regardless of market fluctuations. Step 5. Research stocks, if choosing individual companies. If you decide to invest in individual stocks, thorough research is crucial. Understand the company's business model, its financial health, look at their revenue, profits, and debt, its competitors, and its future growth potential. Look at reliable sources of information like company financial reports, news articles, and analyst opinions. Remember that investing in individual stocks carries higher risk than diversified funds. Step 6. Place your trades. Once you've chosen your investments, it's time to place your trades through your brokerage account. You'll typically need to specify the stock symbol, the number of shares you want to buy, and the order type, like a market order, which executes at the current best available price, or a limit order, which allows you to set a specific price. Double-check all the details before confirming your trade. Step 7. Monitor your investments and stay informed. Investing in the stock market is not a one-time event. It's important to regularly monitor your investments and stay informed about the companies you've invested in and the overall market conditions. However, avoid constantly checking your portfolio, as short-term market fluctuations are normal. Focus on the long-term growth potential of your investments. Important considerations and disclaimer. Remember, investing in the stock market involves risk, and you could lose money. Never invest more than you can afford to lose. This video is for educational purposes only and should not be considered financial advice. It's always a good idea to consult with a qualified financial advisor before making any investment decisions. Getting started with stock market investing might seem daunting, but by taking it one step at a time and continuously learning, you can build a solid financial future. If you found this video helpful, Please give it a thumbs up and subscribe for more beginner-friendly financial content. Let us know in the comments below what other investing topics you'd like us to cover.